And so I think that's something that people and home buyers need to realize is that it is a very consistent market within Ottawa, very stable incomes, employment base. And so, and that's been historical. That's not something that's, an apparition right now.
Welcome to the Ottawa Real Estate Podcast. Join your hosts, Paul Stevenson, David Warren, and Greg Campbell, as they explore the world of real estate and mortgages. From the heart of Canada's capital to markets nationwide, and even a little beyond. Get ready for expert insights and hot topics. Let's get started.
Welcome to the Ottawa Real Estate Podcast, your trusted source for all things real estate in the nation's capital. I'm your host, Paul Stevenson, joined as always by my co-hosts and amazing humans, Greg Campbell and David Warren. We're here to guide you through the latest market trends, insider tips, and expert insights to help you make informed decisions in real estate. This episode is proudly sponsored by Gertin Poirier Avocat Lawyers, providing top-tier legal services for your real estate needs, big insurance, protecting what matters most, and Centum, our partner in finding the perfect mortgage solution, best network in Canada. Whether you're a buyer, seller, investor, or just curious about the market, we've got you covered. Don't forget to like, subscribe, follow us on social media for exclusive content and updates. Let's get it, gentlemen. What's going on? How are we?
We be getting it, Paul.
We be getting it. What's going on? How was the weekend and the week start?
It was good. It's funny when that question comes up. I'm like, what happened over the weekend? It's always a blur. I'm really enjoying my Sundays where I just hang out with my family.
Yes.
Primarily at home. Tidy up, do some chill time with the kids, some games maybe. Maybe crack a brew. Maybe they bake something that I'll eat later. It's good. At that age. Lots of fun. What you got? That's what you got to look forward to, David. When all these baking food for you. Bacon muffins while you have a beer on a nice Sunday afternoon.
I got slap shots to the shins.
Slap shots to the shins right now. Maybe he'll be a messy baker later. Or not.
Yeah, probably not.
That's your fake that.
Yeah. Anyways, that's pretty much my weekend. I don't know. Something else happened. I don't know what else happened.
I did a Williams crawl.
Story. Go ahead.
Oh, there you go. We did a little Carlton Place pub crawl with a guest of the show. Kevin Cosgrove joined us as well. There's a few of us. We did a little crawl through CP.
And then a crawl home.
Yeah.
Did you guys? Yeah. So it was super fun.
Yeah, it was a good time. And you know what's great about Carlton Place is everything shuts down at basically midnight. So you get home at a respectable hour. You can live with yourself in the morning,
Not at 2 a.m. and then get home at 3 a.m. and then cry.
Yeah. No, and it was Winterfest here on Saturday. So Kevin has a coffee shop here called Foundry. Shout out to Foundry. And they had some live music, a couple espresso martinis. It was a good time. Good time, good people, great town.
That's cool. I like that. I had to miss that one. I missed it, and that reminds me. I remembered at the end there Saturday night we had Matt Williams and his family over at our place. Longtime listener of the show, became a client through the podcast from the UK to Ottawa. We've built a strong friendship.
MW.
Through the tow rep. So we had a great time.
That's good. So what's happening in real estate, gentlemen? Greg, you got some, let's get off some numbers. Greg's got some stats.
You want me to get into those stats? This is like a stat. I was thinking about this today to remind people. I talk to people about this when I need to, and I haven't looked at the chart in a while just to kind of clarify and confirm that I'm correct and that this is something that happens. I've never looked at this in other cities, so keep that in mind. But this is Ottawa. This is the Ottawa Real Estate Podcast. I sell real estate in Ottawa, not anywhere else. In Ottawa, in neighborhoods. So I do the numbers for Ottawa. Some of our listeners think that our numbers are not correct here for some reason. Ottawa has shown over the years that every 20 years, there's a big increase in numbers. Like the numbers go up, the percentages go up the most. So if you go back to It starts here at 1980. And, 1983, 1984, percentage change, like increase in the average price goes up 21%, number of homes sold, 21%, 18.4%, 83, 84. Everything's up. Everything's up. Number of new agents are up. Dollar volume's up. Percentage change. Average sales price is up. And then it's just kind of like it's a steady increase a little bit, back down, negative in the 90s, 2001, 2002, boom, up 10%, up 14%. Then it kind of just starts going down a bit. 2006, we got a 4 points.
Only 9%, hey? Only 9% in 2003.
Yeah. And then, goes to just kind of flat lines, slowly up and down a little bit. It's kind of like just a steady flow, and then in the 2010s, basically, we go down where it's very, very balanced, like 1.6%, 1.2% increase in 2014, 1.2 in 2016. And then voila, 20-year mark hits. Boom. Regardless of COVID, it went up. It went up higher than it probably would have, but historically, it was going to go up regardless. So that just kind of hit it extra hard. And now 2022, was 7.1% increase, and then negative 5.3% in 2023. So this year we'll see where we end up. But it's
Also
like
the total volume.
oh yeah,
More units. Oh no, what's the far right column?
the far right is number of members at year end. That's a new one. That wasn't there before.
That's cool.
Number of members. It is cool. There's more than ever before. I think at the end of this year, my guess is that's going to be down by about 300.
Yeah.
I would think, people leaving the industry. But my point is, when I talk to sellers now, I try to advise of this, saying that we've hit the 20-year cycle peak, regardless of COVID. It's just a natural course of things in Ottawa. It seems historically, if you go back even to the 1960s, it's the same thing. There's an older chart that I'd seen before. I couldn't find it. This one only went to 1980. But that's what I'm saying is we're at a flat line. So this is my experience and my opinion based on these numbers and based what I've seen over the years. I'm telling people right now that this spring, I don't expect to see much of a change versus where we are right now. I mean, there will be more listings, but there's still a lot of listings out now. There's people shopping. People are, hesitating. They're on the fence. They're making sure they're making the right decision. So if you list now versus listing in spring, I personally don't see that much of a change in price for next year, for 2025, especially with just world macro and micro economics going on in the world globally and in our country. There's a lot of change. So if your house is worth $750,000 today, my guess is it's going to be worth $750,000 in March, give or take. Give or take. That's my take. That's my opinion. Greg Campbell, Tariff.
So there's a chart that I referenced. It's very similar, but it is one that goes back to 56. I just posted the link for you there. But to exactly your point, you go back to 1968. So through 56, positive gains, a negative 0.7. 1968, positive 19.8% gains. 1969, 10% gains. 1972, 10%. 1973, 25.3. 1974, 21.8.
Yeah.
And down to 6.4, 10%. And then it continues along. And then 83, 84, like you're mentioning, 21, 18. So it's, earlier on when obviously, home prices were a lot cheaper, but it was also harder to get money, and the banking system was way different back then from a leverage perspective. So, but removing that, of just looking at those stats, back then it was every 5 and 10 years that it was double-digit increases in Ottawa, and then went out to 10 years and then out to 20, and it's been every 20 on the nose pretty well, like you're saying, since the 80s. But when you look at that chart, and whenever I talk to clients as well, and they talk about, I talk about the stability in the Ottawa market and our median household income, when you look at charts like that and what you displayed, it shows you and demonstrates how consistent the Ottawa market is. It doesn't have the huge negatives like other markets. It's a very, very consistently up. There's the odd time where there's a mild negative. And I think since 56, it's like five years since 56 that there's been a negative. In a lot of cases, it's, negative 0.7, negative 1.7 or something like that. Like it's very negative 0.4, negative 1.9. It's very
minimal.
Like they're not huge fall offs like you get in a lot of other cities or countries. And so I think that's something that people and home buyers need to realize is that it is a very consistent market within Ottawa, very stable incomes, employment base. And so, and that's been historical. That's not something that's, an apparition right now.
So based on this chart, if you're waiting to buy, you should wait till 2039 and then load up because that's the year before it. It's 2 years of double-digit gains.
And ignore everything in between.
If you're waiting to the market, 2039 is the year. Yeah.
Save and hope you're still alive.
Yeah.
Because you never know.
That's a really cool
man.
chart, Greg. I like that. I like that a lot. And what's interesting about that too is since 1999, the number of sales is also extremely consistent. Like it ranges. I think the lowest year is about 12 to 13,000, and every other year is between like 13 and 15. There's a couple anomalies, obviously 2019, 2020. That was those were very odd years, but generally speaking, it's between like 13 and 15,000.
Yeah,
which is interesting.
Since
It's kind of odd.
2000. A lot of homes.
But that's kind of odd considering that our population since 2000 has grown significantly.
I guess that's investor-based rentals then, eh? That would make that kind of cap.
Yeah.
I wonder what
purpose-built rentals.
Yeah, that's
purpose-built rentals.
I'd like to see the rentals between 99 to now.
There was a figure that Ron Butler, who's a very well-respected mortgage professional in the industry, and he was quoted last week on his podcast of referencing we were talking about housing starts and what that delineation of purpose-built rentals and single-family, that single-family rental or purpose-built homes are down 70%.
Crazy.
So for resale, single-family home, like new construction is down 70%. What the numbers are that are being advertised are purpose-built rentals as housing starts. So kind of what we were talking about. So talking about last week or the week before about kind of what those figures looked like and whether there was a decrease in the single family, then that seemingly is the case.
Yeah, they're just not being built the same. At the same time, I was reading something else about how when single-family homes were the main focus of homes being built in Canada, those homes were usually a maximum of 1,400 square feet, which is a big difference because 1,400 square feet, you can find that easily in a townhome, even in a stacked townhome sometimes. So the size difference is quite significant, I think. Like single-family homes now, there are small ones that'll start maybe around like 1,700. But generally, the average is going to be around 21, I would say, in Canada for a single-family home. So,
yeah, you're right. Like even
that are going back to smaller homes, like they were talking about with the, like the Boxable brand, not container homes, but not tiny homes, modular homes. Thank you, things like that.
Yeah, even looking at Carlton Place, where there is a lot of new development here, all of the single-family homes, as you said, are 2,500 to 3,000 square feet, finished basements, 5 bedrooms. Like they're huge houses. Like I was looking at a few when I was considering moving out here, and we're a family of 4. My daughter has moved out now. A few pets, and even for us, it was way too big. Like we looked at it like this is too big. Like we just don't need this much space. So I think it's interesting the dynamic, as you said, Greg, because 1,400 square feet. Like I think we all grew up in Beacon Hill. Most of the homes there, I was there yesterday. Most of the homes there are, they're all single family homes, but they're probably, like you said, 1,600, 1,700 square feet. Like they're not massive houses, but they're enough, finished basement, bungalow, 3 bedrooms upstairs, whatever it is.
Nice yard.
Yeah, nice yard. But now it's, you get a 3,000 square foot home and a 100 square foot yard. You get like a little deck and a 100 square foot yard. That's it.
And that's the thing. I feel that people are just, instead of focusing on a smaller house on the same lot, basically now, like even though the lots are smaller, you could put a smaller home on those lots people might be okay with that. They just want it. A lot of people still want a single family home. Doesn't have to be massive.
I'm going to correct. I want to correct what I said because I found the article. It wasn't 70%. Single family home starts are hit a 70-year low.
It's probably the same.
Not percent.
I think it's probably
that's pretty pathetic that we're building less homes than we did than 70 years ago.
And I don't think that's changing until the government changes their attitude.
But what about that government program, the Build More Homes Faster program or whatever it was called?
Build more homes. Oh, 40.
Wasn't that the name of it?
Fuck, build no homes immediately is what it's called.
Homes slowly.
Build no homes slowly. Oh,
the Build No Homes Slowly program.
Yeah.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Galtain Poirier Avocats Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at galtainpoirierlaw.ca. Let's get to the heart of your deal.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most.
Should we get into the news, gentlemen? Lots to cover.
Oh, so much to cover.
So this came out yesterday, and our dollar took a hit right after. Trump pledges 25% tariff on Canadian products until border issues solved. So on November 25th, President-elect Donald Trump announced plans to impose a 25% tariff on all imports from Canada and Mexico effective immediately upon his inauguration on January 20th, 2025. This measure aims to address issues related to illegal immigration and drug trafficking into the United States. Trump stated that the tariffs would remain until these concerns are resolved. The proposed tariffs have raised significant concerns about potential disruptions to North American trade and supply chains. Canada, which sends over 77% of its exports to the U.S., could face substantial economic impacts. Ontario Premier Doug Ford described the tariffs as devastating and has called for a meeting with all premiers and Prime Minister Justin Trudeau to discuss the issue. Financial markets have reacted to the announcement, with the Canadian dollar experiencing a 1.4% decline after the U.S. dollar against the U.S. dollar. Economists warn that the tariffs could lead to higher consumer prices in the U.S. and potential retaliatory measures from affected countries, further straining international trade relationships. That's the summary, gentlemen. What do you think? What do you think? That's a big
no.
You know what? Go ahead, Dave.
No, I was gonna say combine that just at the optics and whether it's pandering or not. I think that he will put in some tariff one way or another. But you combine that with the carbon tax increase that we'll see April 1st, 2025 as well, coinciding with that, our economy is going to be, plain and simple. He's been promising tariffs to Canada, and this is just he put a number on it now and made it overly abundantly clear that this is going to happen unless our governments work with his.
Yeah. Hey, basic, get in line or we're going to tax you.
Yeah. I don't, you know what? Personally, it will suck for Canadians overall for a bit, but I think as a president, he's doing what's right for his country and he's taking charge, which has been lacking in most places for a long time, where it's just this weird kind of complacent, our country being like, oh, this is just how it is. It's easy. We're going to just do all these things. There's going to be nothing, no strict rules. We can do what we want. Meanwhile, at the same time, we send fuel, we send energy to the US and they charge it back to us. They send it back to us and we pay more on that. So what are we even doing? I think it's time that maybe Canada will be like, okay, let's start using our energy for Canadians and, work it like that way instead of like sitting here and complaining and crying about it. That's all they're going to do. They're going to glorify it, being like, oh, Trump, he taxed us. What a fucking horrible president. But it's like, no, he's taking charge of the United States, trying to build it better. And this is part of where it needs to start because of our loose border rules and whatever nonsense that's been going on here for years. That's my take on it.
Yeah, I think I'm kind of surprised that the bond market hasn't reacted as I thought it would today or this morning. It's actually dipped a bit. But one thing we saw, kind of bring this to talking about real estate is obviously if we're dramatically impacted, if there is tariffs like that hit, 77% of exports decrease, that's going to obviously harm our economy, pull money out of Canada where people do not have the funds for investing here or for purchasing homes. But then further to that, we saw this past week, out of nowhere, a $250 check be promised to 19 million Canadians for no reason, adding $4.68 billion to our deficit because it's not that we run a surplus that we now have to pay interest on, not actually doing anything. And what that actually did was have a complete negative effect on our economy. It drove up bonds to the point where all the banks started increasing their fixed rates because of the announcement of money being injected into the economy. 4.68 billion not asked for being injected into the Canadian economy when we are trying to keep inflation down. And we were looking at a 25 or 50 basis point drop by the Bank of Canada December 11th, where now it's more seemingly like going to be a 0.25% because of this surprise 200 check being given out. That is more to me the more immediate, dealing with kind of the more immediate issues than like Trump's potential tariffs, because there's still time to figure something out with his incoming party. But currently we have a full disconnect from the Canadian finance minister and the Bank of Canada. And I don't know why they think that it's a good idea to inject almost $5 billion of debt into the Canadian economy to buy votes that we're now going to be interest on in perpetuity. And when we've got a Bank of Canada trying to bring inflation down and keep it down so that we can bring rates down, prime down to affect the predominant portion of the economy, including businesses, including individuals, students with their student debt, lines of credit. It affects all of that. And out of nowhere, they're just cutting taxes on things that people didn't ask for tax to be cut on and to inject money that doesn't need to be there. And we saw this past week alone from that announcement, bonds go up 20 basis points. Mortgage fixed rates have gone from right now, they were at 4.44 for the predominant portion of lenders on a 5-year fixed. They're now at 4.54. And I have sitting in my inbox a bunch of announcements that as of noon today, 1 o'clock, rates are going up again on the fixed rates because of this. And it's a direct impact of this injection of cash into the economy, which makes no freaking sense.
Yeah.
Like you at least wait till you're going to actually call an election if that's going to be the case, if you're going to try and buy votes that badly. But it absolutely is contradictory to what the Bank of Canada and the rest of the economy actually wants.
Yeah, just same thing. I got a email from a lender. They were at 4.44 last week, now at 4.64. So we're seeing that basically across the board. Is, as you said, Dave, it's like the left arm's not talking to the right, Everyone's just everyone's just flailing their arms, doing what they want, eh? And they be to make that announcement, right? So happy.
Oh yeah,
it's like, dude, no thinking at all.
So I don't think they can comment on anything that Trump announced as far as tariffs are concerned when right now we're currently like harming our own economy and our own future in the immediate, where we would have been on a right track, injecting all this cash. Where now Canadians aren't going to see the decrease in prime that they would have seen come December 11th, which is going to impact everyone's variable rate mortgage. Like I said, student lines of credit are tied to that. OSAP's tied to that. Business loans are tied to that. Lines of unsecured lines of credit, secured lines of credit are all tied to bank prime. It's not just mortgage holders. And so when you've got people not able to spend money and retail being decimated because people don't have discretionary funds, it's things like this. $250 is not going to dramatically impact that. Dropping prime by 0.5% instead of 0 is going to make more of an impact on a every month basis, put hundreds of dollars back into everyone's pocket on an ongoing basis. But we
not to harp on U.S. politics, but since we were talking about Trump and you're talking about this, I did hear an interesting conversation recently where, Elon Musk, where they're talking about the DOGE, the Department of Government Efficiency, but making a valid point in the sense that we pay, tens of thousands of dollars in tax every year. We're taxed on our income. We're taxed on everything we buy, everything we sell. Like we're taxed everywhere. We all know this, but we really don't have any sort of like list or budget of where that money is going. It's just kind of allocated however they want. And I understand that's how a democracy works. We give them our money, they allocate it. We nominate them, they allocate the money and so on. But having an actual list of where that money is going would be very helpful so we can be the most efficient with our money. And I think a lot of people just see that people are busy. They have their own jobs, their own families, their own responsibilities. They see a headline saying they're going to get $250 and that seems great. Like with no concept of like, oh, that we're paying that money. Like that's actually coming from my own pocket first. And then it's like a reimbursement. It's not like you're just getting $250 out of nowhere. You're basically paying into that or having to pay into that moving forward for the next 10 years to get that money back. So like you said, Dave, if that pushes inflation or keeps inflation high to the point where they can't, let's say they can't drop rates for whatever reason, then you're going to be paying an extra $250 plus an interest just on your line of credit or on your whatever, your student debt or whatever it is. So although it seems great, you see that deposit of $250 in your account, it's the slow drip for the next 10 years after that costs you. It's not the little boost in $250. It's the $1,250 that you're paying over the next year in additional costs and taxes and everything else.
So, even people with low income are responding that they think this is a terrible idea and they wish it never happened. You know what I mean? There should be a new trend of people just filming themselves ripping up their $250 rebate from the Canadian government. But unfortunately, everyone will spend it in some way. But they'll probably spend it on the carbon tax that they pay, or on the energy tax from your hydro. How your hydro is basically double now. Pay it on that tax.
Yeah, the gas bills, the carbon gas bills, just $100 and only 15 in services.
Yeah.
Speaking of increased costs, I had an article here talking about rent control. So I just want to touch on that quickly, if you gentlemen will entertain me. So basically, this article was focused on rent control in Canada. It's always a very common. It comes up every now and then, Dave. I'm sure I know you have multiple properties. I'm sure you hear about this all the time. So this is an article from the Financial Post. It discusses kind of the ongoing debate over rent control policies in Canada and highlighting the complexities and differing perspectives. So current landscape of rent control in Canada, I kind of broken into two: current landscape and then arguments for and against. So current landscape is that rent control policies in Canada vary from province and territory, with each jurisdiction implementing its own regulations to manage rental price increases. For instance, Ontario's Residential Tenancies Act 2006 governs landlord and tenant relations, including rent control measures. In Ontario, rent control applies to units first occupied for residential purposes before November 15th, 2018, limiting annual rent increases to a maximum guideline set by the government. In contrast, provinces like Alberta and Saskatchewan do not impose limits on the amount landlords can charge for rent. However, they have regulations requiring landlords to provide advance notice before increasing rent and limiting the frequency of such increases. So pretty wide range depending on what province you're living in. Arguments for and against rent control. So proponents of rent control argue that it provides necessary protection for tenants against sudden and unaffordable rent hikes, contributing to housing stability and affordability. They contend that without such regulations, tenants may face displacement due to escalating housing costs, particularly in urban centers with high demand. Opponents, however, argue that rent control can lead to reduced investment in rental housing, and potential landlords may find the regulated returns unattractive. This could result in a decreased supply of rental units, potentially exacerbating housing shortages. Additionally, critics suggest that rent control may lead to a decline in the quality of rental housing, as landlords might be less inclined to invest in maintenance and improvements. So what do you guys think about this? I know we talk about rent, and rent's been kind of up and down. It's stagnated a bit now. But how do you feel about kind of Ontario's current rent control measures, and like what are kind of in your opinion, like the pros and cons of each?
So for me, I think in Ontario, I think the primary issue that needs to be addressed that is driving away investors, which then drives away supply, like they mentioned, and keeps rent elevated, is our landlord and tenant board is atrocious. They do not have enough staff. When taking 6 to 9 months to address a single issue from a tenant or from a landlord, you scare away investors. You
6 to
scare
9
away
months.
people wanting, where people don't want to have any rentals or hold rentals, which then pulls supply away from the market, which then, it's a simple supply and demand issue at that point. If you have an efficient landlord and tenant board, which I think is important to have, absolutely, where you can address concerns and lodged complaints from both sides, both tenant and landlord, you're going to have a more balanced market. You're going to keep rent lower because investors are going to be more apt to invest. Like I will tell you, I won't buy a rental in Ontario. Like, period. I have in the past. I don't have them anymore. I have a mixed use commercial. My rentals are in other provinces where they don't have the same issues with like the landlord and tenant board issues. They're much more efficient and they don't have the same regulation in rent control.
And this is
Because
going on forever.
it allows for me to invest in that building. It allows for me to keep it up like well above standards. And I can slowly not be a massive hit to somebody or anything like that as far as rent increase, but I'm willing to put funds in that property because I can address when there is a non-payment. I mean, it is quicker to address things like that. But when you have a market, and I hear from tons of investors all the time, like they're not willing to invest in provinces like Ontario where you cannot, like you have somebody in your property that hasn't paid for 6 months, you're having to carry that yourself with elevated mortgage rates where they're at, elevated property tax rates. In some cases, Toronto last year increased their property taxes, 16%, I think it was. They can't raise rents the same way, and plus where interest rates went. But then you also have somebody that doesn't pay for 6 months that you can't get out, and that even if you have a multi-unit, they're doing like hard drugs in there and making you're causing issues for other tenants. That's still not enough. Even if you've called police on a regular basis, you still can't get them out and you're having to wait months on end. Like that's why is an individual landlord or landlord in general or investor want to deal with those problems if they can't be addressed? So you pull that money and that investment out of the market, and people are not willing to buy product. So you decrease supply and yeah, unfortunately, demand is there and continuing to grow, as we've talked about, of the growing population of Ontario and the growing population of Canada. It just constantly increases that rent cost.
Yeah, I think that's why we're seeing more corporate, buildings, rental buildings going up now, as opposed to solo investors. You're right, like, or not solo, but you know what I mean, smaller groups of investors like you're talking about in Ontario. It's just not here anymore.
The thing is, when you don't have those individual investors, the mom and pop investors, you then also lose the single family home rentals. You lose the townhome rentals. All the larger institutional investors are building high rises. They're building condo buildings, and those aren't always built and purpose built for families. Those aren't addressing a big need in the community, where individual mom and pop investors are the ones that are addressing the need in the community for single family homes and townhomes and larger units of 3 units, maybe 3-bedroom, that sort of thing, as opposed to the larger buildings that are focused on 1 and 2-bedroom units or bachelor units, which doesn't help families or growing families. So there's a necessity for both, but as a mom and pop investor, like the requirement, what's there, the limitations on how you can increase rent and how you can actually address non-payment or issues within your own property, and you can't do that. Why would somebody want to invest?
Agree. Well, take that 250, put it to offset the rent you're not getting, and you're good.
Bob's your uncle.
Yeah, Bob's your uncle. Everything's great.
That.
Yeah, all set.
Things are great in Canada. I got a quick one I want to go over. Yeah. Well, it's not a quick one, but it's a good conversation, I think, here. This is a Better Dwelling article. Canada expects 1.2 million residents to leave next year, and refugee claims soar. In recent developments, the Canadian government has announced significant reductions in immigration targets, aiming to decrease both permanent and temporary resident numbers over the coming years. The policy shift is expected to have notable implications for the real estate market across the country. Reduction in temporary residents. The government plans to reduce the temporary resident population from approximately 2.96 million to just over 2 million by the end of 2026. This reduction involves cutting around 891,000 temporary visas over the next 2 years, affecting international students, temporary foreign workers, and other non-permanent residents. Impact on housing demand. Temporary residents, particularly international students and foreign workers, have been significant contributors to the housing demand, especially in rental markets. A decrease in their numbers could lead to a reduced demand for rental properties, potentially easing the current housing shortage and stabilizing rental prices. However, this effect may vary regionally, with areas heavily reliant on temporary residents experiencing more pronounced changes. Surge in refugee claims. Concurrently, there's been notable increase in refugee claims, with 133,000 filed as of September 2024, making a 30% rise from the previous year. A significant portion of these claims were made by individuals already in Canada, including international students. This surge may lead to an increased demand for temporary housing solutions as municipalities work to accommodate asylum seekers. Long-term real estate implications. While the immediate effect may be a softening of rental demand, the long-term implications for the real estate market are complex. Reduced immigration could slow population growth, potentially impacting housing demand and economic activity. However, it may also alleviate some pressures on housing affordability and infrastructure. Real estate investors and developers should monitor these policy changes closely, as they may influence market dynamics and investment strategies in the coming years. In summary, Canada's recent immigration policy adjustments are poised to affect the real estate sector, particularly in rental markets. Stakeholders should stay informed and adaptable to navigate the evolving landscape effectively. Going off of your rental comments, right?
A lot of people. It's basically 5% of the country.
Right?
It's a large amount of people.
That's wild. And like the refugee claims are interesting too. I mean, but this is where we're headed. So this is interesting. People leaving, people wanting to stay. What goes on? We just report the news. Is that what we do?
Yeah.
I don't know what we do anymore.
It's a news show, remember? It's a news show.
We show up, Steven starts the camera, we just talk. It's basically, we read, we chat. Very informative. Very informative.
In the mood boost.
Let's do it.
Yeah, I wanted, just for fun while you guys were chatting, I ran that whole chart that Greg posted with all the historical data into one of our beautiful AI softwares and asked what the prediction for 2024 numbers would be based on all the historical data. So here's what it says: is based on historical trends, here are the predictions for 2024. And we'll revisit this in early 2025 to see if it's accurate. Predicted average price, 696,768. Predicted units sold, 13,757. Predicted total volume, 9.58 billion. And predicted new listings, 4,010. It says these predictions assume a continuation of average growth rates and trends from prior years adjusted for recent fluctuations. This is the 4 espressos hitting. I can't even speak. My jaw is just chattering now from drinking all that caffeine. Thanks, Foundry. But that was fun. We'll revisit those and see.
Yeah, we need to PDF that and keep that.
So yeah, I like that a lot, man. I can find that though. Next week on Toe Rep. Is next week episode 200?
It is.
Holy shit.
It is.
Wow.
It is.
Oh, maybe we'll have it for that.
Mood boost. Thanks, Steven. All right. 3 today. This is awesome. Number 1, where do dads store dad jokes? In the database. The database. That's number 2. I'm so good at sleeping that I could do it with my eyes closed. No. And last but not least, I had a dream that I weighed less than 1,000th of a gram. I was like, OMG.
That's pretty clever.
Couldn't say that with
How
a
about
straight
that new
face.
Jaguar logo? A new ad.
No, we're hitting all the topics today.
That's for episode 200.
Trump, Doge, Jaguar. What else we got? What else we have to hit? What's trending on Twitter right now? Thank you, everyone, for tuning in. Thanks, as always, to our amazing sponsors. And if you're not already subscribed, subscribe, review, comment. We love you. We'll be back next week. Episode 200, gentlemen. 200. Let's go. All right. We'll see you next week. Deuces.